Hello and welcome to FountainFX on Tuesday the 13th of May 2014. We are looking at the Euro US dollar on the 30-minute chart. We're going to run through this very quickly today. Yesterday's trading conditions were extremely difficult. Price was very much range bound in this tight channel of around about 15-16 points. And on this chart I've marked on the resistance area of 137.71. 137.71, get that right, and 137.54 is the support at the bottom, and you can see that price is very much for the whole day has just been stuck. Even over the Asian market, it's been stuck between this level. So based on putting these levels on the chart, let's see exactly how or what price has done this morning with the European Open. Okay, so we moved the chart to the right hand side and we see that just before the open comes, around about, let's just see what time that was. That was at 9:30, the close of this candlestick. So European Open happened here at 9 o'clock, price was down here and it pushed all the way up from the 137.60 all the way up to the 137.70. So that was quite a nice move. You see momentum increasing right into resistance. So as you get better at this, then you'd have seen that as a good key strong point to say, right, sell, because we're at resistance. So the close of that candlestick, we want to place a sell order, and we see what happens after that. And then we see that price turns and it starts to fall. It doesn't engulf this bullish candlestick just yet. On the next candlestick we can see that price, the wick, has come all the way back up to the 137.70 again, so it's given us another chance, another opportunity to sell at this point before it then closes below its open. And then the next candlestick that happens breaks through the area of support, pushes down quite considerably and then comes back to close just below the area of support. Well, that's the trigger. If we are trading breakouts, that would be the trigger for us to then get in on the trade. So the close of this candlestick means that we basically place our sell order on the market. So if we look at where the close of that candlestick is, it's the 137.52. So we place a sell order at 137.52. We can place our stop above here at the 137.70 if you want to, just to say at the top. If it comes all the way back up to there, it shows that it isn't going to fall, it's not going to go in any trend. So we've got around about a 20-point risk, okay, on this trade. Anyway, so we place our sell order there and we then see what price does, and we can see that price has continued to fall. Now it could do anything, being honest, it could do anything, but fortunately in this case it does what we expect it to do, or it continues in the direction that we would like it to go, and it falls, and it falls another 30 odd points. Now at this point it's still going, so we'll be sitting there very happy, expecting it to continue to drop and hoping that price will just crash. You know, it'd be nice to see on this day of all days, it'd be nice to see the euro collapse down to $1.30, you know, when we can bank 700 points of profit without much effort. Well, that's not how the market works. So unfortunately it's moved 30 points, which is very good, and we then get a spinning top which shows indecision. So at this point I would move my stop from being up here at the 137.70 down to the 137.20. So now I've banked in 32 points of profit from where I entered at the 137.52 all the way down here to the 137.20. So if price now comes against me, I'm out. I've made my 32 points of profit. I'm happy for the day. And what happens next? Continues down. So I could manage my stop further if I want to, because after a big move like this you can expect price will turn and come back, or it will change again. Okay, it doesn't always keep falling. If it does keep falling, then that's fine, you're still in the trade. But if it's likely that if it's gone in one direction it can turn and come back. We've got the MACD confirming it's still going in a downward trend, which is fine, and that's confirming it's in a downward trend, so we can still stick with it. And then eventually we get a pullback, and there's the pullback, and we're out of the trade, but we've banked our 32 points of profit and we're happy. Okay, we don't have to take the tops and the bottoms, we don't have to get everything, but we've actually taken, if you consider that move, price has moved from 137.70 down to a low of 137. Okay, so it's moved 70 points and we've taken 32 points of the move. We now need to remember the rule, and there's a rule that other traders share, which is okay traders take 10% of the move. Good traders take 20% and the best traders take 30%. So if we've taken 32 points out of a 70-point move, we're almost at 50%. So it shows that we're being good traders. And by doing this, and doing this consistently, put my teeth back in, then it shows that we will have something that we can build on. If we are wanting to get everything, then we will always be disappointed, because to be able to get the entire move means that we either have to be God or have some form of power that we can see into the future. So in that sense, it's not going to happen, but take the moves when they happen and use price action to plan and predict when there is a high probability that price will break out, and therefore you're going to get a move with momentum. And that's what I'm really trying to share with you in FountainFX, that you can start to develop a consistency and with that confidence. So thank you very much for FountainFX, and have a great day.